Hi, welcome to Real Estate Straight Up with Eileen Lanza. I am a real estate professional and I will be bringing you some hopefully really interesting topics. And today I'm with Andy Christenot. She is a mortgage professional. Hi, Andy.
Hi, Eileen.
Let's have a toast.
Cheers.
Cheers. This is straight up. Get it? So I'm going to start with, I get a phone call from a buyer and they say, I want to see a house. And I try to set up what I call a buyer consultation because I want us to start out correctly and have all our ducks in a row. I bring them into our office for 1 hour. I think I'm pretty good at it. We go over the escrow process, the buying process, what their needs and wants are. And then when they leave me, I tell them that the first thing they need to do is to get a pre-approval. So I pass on your information. So tell me how long you've been in the business.
Oh, geez. Let's see here.
Okay.
I am in my 19th year.
Oh my God, that's impossible.
It's true. It's
But
true.
you're like 29, so I think it's illegal. I think it's illegal to get your mortgage.
I'm actually not old enough to drink. No.
Oh, okay. Well, okay. So go ahead.
Cheers.
Cheers.
So I am in my 19th year. I started doing loans while I was in college.
Oh my gosh.
Back in the old days, before emails,
Faxes.
fax machines.
Okay.
It took 60 to 90 days to close a deal.
And what is it now?
Less than 30.
Okay.
Of course, depending on the scenario.
Okay.
Depending on the escrow time.
We'll dig a
Yes.
little bit deeper in
Yes.
that. Okay. And how easy is it to get a mortgage? I'm brand new. I want to. What do I have to do? How is it easy? Is it hard? What homework are you going to give me when I call you?
So what I like to do is every time I talk to a new client, I like to get a little background information, what the situation is, what their story is, what their employment history is.
Is this on the phone
Yes.
or do you want to meet us in person?
Either way, most people like to do it on the phone. It's a little more efficient.
Would you meet them with cocktails?
Sure.
Okay, and you're getting a little low there, so I'm sorry. So you're having your meeting.
Yes.
Okay.
So I'm gathering information on what their story is, employment history, down payment information, all of that to sort of build their story, build their file, and figure out what I need to ask for. Because everybody is different. People's income is different, their employment's different. Maybe they've switched jobs, whatever the case is. So
Okay.
I gather as much information as I can up front,
Yeah.
so that I know what to ask for to be efficient through the loan process, and so that when I'm issuing a loan pre-approval to you as the agent, they're ready to go and we're ready for underwriting.
And hopefully no surprises.
There will be no surprises, yes.
Okay. So how long does your initial phone call take? Is it a 10-minute? Are you on the phone for 45? What can a buyer expect?
Anywhere from 15 minutes to 30 minutes,
Okay.
probably.
Okay. So,
Again, it's just the initial call, and once
so you give them homework?
I give them homework, I email a list right away on what I need based
Okay.
on the phone
like
call.
Like a checklist?
Yes.
I like that, nice and simple.
Yes.
Okay.
So everybody gets an email right after the phone call on what I need. They start gathering all the documentation based on the phone call.
Okay.
Mm-hmm.
Okay. You don't need to meet in person. Do you, at that first phone call, do you explain different types of loans? Or do you go through what current rates are like? Or is that for another conversation?
That is an entirely different conversation. And the reason is that most people, well, I shouldn't say most people, a lot of people have a general idea about their
Okay.
circumstances, but a lot of times people haven't applied for loans, or maybe they have applied for loans, but things have changed. And so, no, I don't go into product or loan programs or interest rates until after I've analyzed all the documentation.
Okay.
Because someone may think they fit somewhere, and they may actually fit somewhere else in
Okay.
terms of the loan.
And if
product.
they don't do their homework, they're not serious. They're kind of just fishing around. Or if they're worried about you pulling their credit, is that like a red flag that they're probably not ready to go? Maybe they're 6 months off, a year off.
Not necessarily. It happens quite often where people don't want their credit pulled.
Okay.
And in that case, I'll ask for the rest of the documentation, their tax returns, their W-2s, their pay stubs, and of course the source of the down payment. And I will say, okay, here's what we could do based on you telling me
What you think?
what you think your score is, and you telling
They all
me
say
that
excellent.
yes.
Everybody says excellent. Hello, you do not have excellent credit. I promise you. Excellent's like 830, 850. You do not. The last few applications that I've gone through for rentals, excellent was 598. Like, no. So let the professionals help you. Let her pull your credit. What are points and fees?
Sure. So anytime someone charges, not anyone, but a loan officer, a loan broker charges points, those points are generally to buy down the interest rate.
So if you're not happy with your 5, you could get down to 4 3/4. And
Yes.
that's a point.
Yes.
You buy it.
So the buy down ratio is different depending on where we're taking your loan.
Okay.
Usually it's a point for a quarter buy down, maybe half a point. It just depends on the loan program. So you're buying it down, and the only time I suggest buying down the interest rate is if we have a qualifying
Situation.
issue.
Okay.
If for some reason their debt versus income ratios are a little tight, maybe we have to buy down an interest rate. Maybe the seller's giving a credit, and that credit will allow us to buy down the rate.
With their
Yes.
with that credit money,
Yes.
which is I help you with during the transaction.
Yes.
And what costs should a new buyer know? Like appraisal, is that an upfront fee? How do they pay it, or do they don't attend the appraisal? I can tell you that. But what fees can they expect?
So generally, you have an appraisal fee, which is upfront. That is generally, depending on the property type and square footage and so forth, usually the appraisal is around $500.
Okay.
For a unit property, it's a little more, usually around $700 to $800 for a multi-unit property.
Okay.
You have the appraisal fee. You also have title and escrow fees. Those fees are determined based on the total picture. So it's going to be based on the purchase price as well as the amount that you're financing. Those fees are all determined. I generally say, as a rule of thumb, to have about $7,000 to $10,000 for closing costs.
Okay.
As well as prepaid items like taxes. We have to prepay property taxes.
Do they get nervous when you throw out that number beyond their down payment?
A little bit.
Okay.
A little bit.
Okay.
But I feel most people, if they don't have enough money for the down payment and the closing costs, we set a plan, a long-term plan. If it's
Okay.
going to take them another 3 months to save the $10,000, then that's what we do, and we work, over the next few
Okay.
months to get them so that they have the money.
And if I lock in with you at a good rate, say I'm at 4% and I'm very happy, if we're in an escrow and the economic world changes, can you relock me at a lower number?
No,
You can't.
no.
Okay.
Once your loan is locked, you're
Okay.
locked. The only way to update a rate lock is if the rate improves, if there's at least a quarter improvement. And the chances of that happening are slim.
Okay.
That almost never happens.
Okay.
In 18, almost 19 years,
Oh
I've
my
never.
gosh. Oh my gosh.
had-
Okay. And rates are historically
Yes.
fantastic right
Yes.
now. Our
Yeah.
parents paid probably 15, 20% to buy a house.
When I started, I was quoting 12.95%.
Wow. So 3 and 3.5 and 4 sounds so inexpensive.
Yes.
What could go wrong with a loan in an escrow? Just give me one scenario.
Someone could lose a job.
And then they're
Yes.
out. Okay.
Maybe the property doesn't appraise.
Okay.
In that case, you would either have the choice to bring in the money of the difference if the seller isn't willing to.
Outside your loan?
Yes.
Okay.
If the seller's not willing to negotiate the price, you would either bring in the funds or you would bail out of escrow.
Okay.
What else could come up? People have personal issues that come up and all of a sudden they have to cancel. I've had clients that are in escrow and have had
Now?
job offers in
Elsewhere?
other states.
Aw.
And yeah, so
So
you
they'd
never
be
know.
out their appraisal fee probably.
Yes.
And if they did any inspections with me, they would probably be
Yes.
out that too. And
Yes.
oh well.
Yes.
Grand scheme of things. Are there any special programs right now for first-time home buyers? I get that question a lot.
So we still have FHA programs,
Okay, so 3% down?
3.5% down.
3.5, okay.
But with FHA loans, there's also conventional loans that also will allow for minimal down, 5%, 10% down. So FHA isn't necessarily always the best fit for first-time home buyers.
Okay.
But it does allow for a little bit more flexibility in terms of ratios to qualify and as well as down payment.
Okay, and from a realtor's perspective, the FHA loans tend to get looked at last. So if I'm in a multiple situation and I have a cash and a 20% down and a 50% down, I'm probably going to put the FHA offer last. So that's the problem with that, but at least it's available.
It is available, and you know, I hear that a lot.
But
and internally, yes, of course, there's a difference in terms of underwriting and so forth. But internally and operations wise, there's no difference. I mean, you could certainly run into issues with certain lenders and so forth, where they take a little bit longer and you know, you run over in your contingencies and so forth. But
okay, and from a realtor point of view, if I am the listing agent and someone comes to me with an FHA loan, that means some of my sellers may have to do some fixes on the house. So it's a little bit more, potentially, I have had that situation. It's a little bit more of a problem for a seller, but not impossible. So there's options out there. And how do I know if I should go to a bank or my credit union or start with a mortgage professional? What would you do if you weren't a mortgage professional?
And I suggest to all of my clients to definitely shop.
Okay.
It's a different experience when you're going to a credit union, when you're going to a bank, when you're going to a broker. It's an entirely different experience.
Okay.
With a bank and with a credit union, they don't always have the availability of outside products.
It's just theirs.
It's their stuff.
Okay.
You have to fit in their box.
Okay.
And the process could take a little longer, especially, you know, with bigger banks and things like that.
So you, as a mortgage professional, can shop a program that would work for this particular buyer.
Yes.
And not just walk into Bank of XYZ and take what they got.
Yes.
Okay.
We have access to multiple investors, multiple products, and we look based on each client's specifics and scenario. We look and see where they'll best fit and where we can get the best rate.
Okay. Well, thank you so much. This was the first installation of Real Estate Straight Up. This was my first guest, Andy Christenot.
Thanks for having me.
Thank you. Oh my gosh, I have to fill you up. We cannot toast with an empty glass.
There's a little sip in there.
There you go. I hope you learned something here today. You can give either one of us a call. I'll put our information down in the comments. And thank you for joining us for our happy hour at Real Estate Straight Up with Eileen Lanza. Thank you.
Thank you.
Cheers. Cheers.